welcome. Thank you for being here. How's it going? How is life with you?
Yeah, not too bad actually. So obviously it's been a very volatile year.
Yeah.
Pandemic and lockdowns and not knowing whether you're going into the office or not and not meeting people and all of that sort of thing. But surprisingly, we've been lucky enough that our operating business, so the business that the family and the family office own effectively, has done extremely well this year. So, as I'm sure you've heard and know, it's just a case of which sort of sector you're in this year. I think some have done really well and some have got really hurt. And thankfully, the underlying operating business that we have was deemed an essential business, so it was allowed to stay open. And on top of that, we have a strong online component. So obviously, all things digital have done actually really, really well.
Is that in the DIY construction?
Yeah, so it's electrical manufacturing and distribution, predominantly selling to sort of small, medium-sized contractors. So we have sort of 390 branches in the UK and 1,000 worldwide, but and they do sell some retail to you and I if we wanted, but generally selling to contractors who are looking to fit out, lighting in a place like this, or wiring in a hotel or house or residence.
There was, if I remember correctly, at the beginning of lockdown, there was a period where everything was, at least in the UK, everything was shut down. Then that was loosened.
Yeah.
So there must have been a
blip.
So
there definitely was a blip. March, April, we got really hard hit in the UK.
Really kicked in at the beginning.
Yeah. So we were 40% down in April, in terms of revenues, but we've just had a few of our strongest months to date. So managed to weather the storm, thankfully.
It's a third generation family office, isn't it?
Yeah.
To have the still operating business being the core element is not necessarily what every family office today is based on. I mean, often it's generation wealth from businesses which are now long gone. So that's interesting to see that play.
Yeah, exactly. So we haven't had a liquidity event. We're not planning on having a liquidity event anytime soon. So it's not looking to invest the distributions from an exit of the business. What we're actually looking to do is take dividends or distributions from the operating business and look to build a diversified asset portfolio that's as big and as strong as the operating business in due course, so that the family and stakeholders aren't solely reliant on the operating business. That's the thinking. Because third generation, the family to date have always invested and reinvested into the operating business to grow that. It's done very well. Now in the fortunate enough position to have enough money coming out of that to start thinking about diversification and putting that elsewhere without negatively affecting the operating business, because that can stand on its own two legs.
Absolutely.
Yeah.
And in terms of actually having a dedicated office for managing that, how old is that organisation?
Yeah, so we've had an office in Switzerland for 30 or 40 years, but that has mainly been focused on tax and trusts and company secretarial type work, not investment specific. Mm-hmm. And although we have made real estate investments separate to the operating business from that, but this idea to set up the family office that's more investments focused is fairly recent. It's only 2014, 2015 start. And predominantly started, was from Thomas, third generation now, who is leading the operating business as CEO, but was also felt the responsibility to take care of the family in terms of the diversified asset portfolio as well, and so build out an investment-focused family office. So I came on board, 2015 to assist setting up that office, which is based in the US, and then I moved back here sort of 2 years ago almost to set up the London office.
That's in Texas, isn't it?
Yeah, it's in Dallas, Texas. Yeah.
So you've got a real nice dichotomy of two of the most rich family office environments, London and Texas.
Yeah.
But two very, very different places to be. How do those compare?
Yeah, I mean, it's very interesting. So, as you say, Dallas in particular has got a very strong family office community. A lot of obviously oil and gas and real estate wealth down there, generally. And yet, I must say, when I moved to London, it still felt like this was the center of the family office world, just because it still feels to me like any large family office or large family still likes to have a presence in London. So even if their operating business or their main family office is in a different jurisdiction, Asia, US, Africa, whatever, they still like to have a London office because of, obviously it's a major financial center of the world, timelines, deal flow, and access to other families and family offices. So in a relatively small space, you can meet a lot of other family offices. And so I found that really helpful, and obviously trying to meet people like yourselves who can connect you with other family offices is hugely valuable for deal flow, thinking about how to structure a family office, comparing notes, things like that.
Yeah, there's this kind of this hidden. I'm getting this wrong. I want to get the right philosophy to have here. There's a huge number of family offices here in London, but it's often difficult to wade through who you want to speak to, who is actually a genuine family office,
absolutely.
Who's a multi-family office,
yeah.
Who's actually just trying to sell something. We actually have what I flippantly call the BSFO list, which is the bullshit family office list, because we often get people coming to us saying they're a family office because they want to sell something. And that's an unfortunate reality, is that does exist.
Yeah.
So we filter that, and I always think it's crazy to start a relationship by trying to lie to someone, because after that all your bridges are burnt. So
well, exactly.
I'm sure you've seen that as well.
Yeah, I definitely have. And on the opposite end, the best way to meet a family office is through a good recommendation, right? So from a family office or from someone who's trusted by a family office. So, and to the extent that you do that, or you come from a recommended source, then family offices are willing to speak to you.
Yeah.
But don't go in there pitching products or trying to do something, especially if your money's not on the line or you're not a genuine article.
You can burn bridges very, very quickly if you just pitch off the bat. Right?
Yeah.
It's all that trust in the relationships and the having references from other people.
Yeah.
It's one of the major things we've not been able to have this year, is the offline conversation and the casual chat and the bouncing ideas off each other. Technology can only go so. It can absolutely help with these things, but it can only go so far to solve that problem. So it's nice to gently be getting back into seeing people face to face.
Yeah.
Especially because we've all gone so slightly mad this year, working on Zoom calls and everything.
Yeah, and even Zoom drinks calls aren't that fun. So
I haven't met a Zoom mixer yet, which has actually really worked.
Yeah.
Also, you drink a lot quick on a Zoom call. I don't know about you, but my consumption just went up, and it's a dangerous place to be.
You can only drink or talk, so it limits.
Yeah.
No, but I do, thinking about AYU, what I did like was, your shooting event where you actually mixed with people doing an event at an event, right? Because you have something else to talk. Yeah, you have something else to talk about, and that just eases. That breaks the ice a lot quicker. Even more so than sitting down at a restaurant or that sort of event. So that's really good, and I think that is missing. People at the beginning of the year were thinking about, have we made a complete switch now to a sort of Zoom generation, and all meetings will take place via that? But I think it's been quite apparent that that's not the way. It'll become a critical element, and it may reduce business travel, but nothing can compare to meeting a person in face to face.
I think what we want to do, at least, we're really hoping for the future, is being able to do those events where we get people together, and it's not the name badge thing, it's not the suit and tie thing, it's not the conference thing. It's actually doing something you really want to do. It's going shooting, it's going skiing, it's going to a cocktail making class. It's something that's interesting for people to engage in and over, which is just it's far better to build relationships that way rather than in a boardroom situation. It's just it's a bit archaic and a bit backwards. And having you're a family office, you see 50 pitch decks a day. the ones that actually get through the noise are when there's actually a relationship there.
Yeah,
and
absolutely.
It's introduced by a trusted advisor or a trusted friend. So if we can work on the human relationship first, then everything else falls into place, basically.
Yeah, I think that's right. And also, depending on what you're investing in, if it's venture or if you're backing a particular business, often you're backing leadership or the particular people. So it's really important to get to know those people. And even if it's a fund, venture fund or private equity fund or a hedge fund, in a way you're almost backing the managers or leaders of that group, right? And that's what we're looking to do. That's sort of our ethos as a group: the family, the operating business, and the family office is empowering people. So finding people that we think are like-minded, that are entrepreneurial, that are driven, and empowering them to go ahead and try and build something.
And how have you gone about that this year when we've not been able to actually meet people? One, in the sourcing of deal flow, and then two, have you been executing or have you been just watching? And how's 2020 gone? Yeah,
so again, beginning of the year, first quarter, and possibly even a bit of second quarter, it was thinking about protection more, and strengths of family offices is that you don't have any timelines, right? You're not reporting to anyone. You don't have to deliver quarterly reports or whatever else. Sometimes the best thing you can do is sit on your hands and not do anything, right? Just wait for the storm to pass. You can actively try to protect yourself, but also you can make sure you don't make any stupid mistakes and see how things ride out. So certainly there was a little bit of that in the beginning of let's just seeing how things work out here. Following that, definitely we have, as public markets have continued to rise and nobody can sort of get their heads around why, other than massive, government printing
injections.
We're still thinking, more about contrarian type stuff and protectionary type investments. So, as Tom was mentioning earlier, gold, precious metals, Bitcoin, energy, things like that can be pretty helpful at this stage, I think.
And where do you sit on the family office investment spectrum of? Where do you sit on the family office investment spectrum of fund to direct? Are you into the fund space at all, or is it mainly straightforward direct for you?
We do a bit of both. We definitely prefer direct, but obviously we'll invest into funds and back funds where we feel like we don't have the expertise or they can do something beyond what we could do in-house. We don't want to just allocate completely to funds because then you sort of feel like what's the point in having a family office in a way. And actually the family's DNA is in trying to do things directly, do things themselves, even if you make a couple of mistakes along the way, and learn as you go along. But having said that, so we've done quite a bit of venture directly. Private equity to date we've predominantly done through funds though. Mm-hmm. And we've also backed through a few venture funds and even taken some stakes in venture funds. So yeah, I mean, ideally we'd like to go directly, but we're conscious that there'll always be sectors that we don't have the expertise on, opportunities that are great, and where it makes far more sense to do it through a fund or a different structure than it does trying to do it directly.
And there's we were talking earlier with Sam about the power of family offices, at least in London, but probably globally, about sharing those deals and sharing the knowledge of getting into those specific deals, especially when another family office is far more experienced in something that you find interesting but you don't know about yet.
Yeah.
Having that conversation is a very powerful way to filter through that deal flow.
Yeah, that's true, and we've learned that as well. So for instance, we have a strong underlying operating business in distribution, whether it be electrical products or anything else. We know that space, and so when looking at portfolio at companies, whether they be earlier venture companies or later stage, potential acquisitions or investments, we can pull in the expertise, management, infrastructure from our operating business to take a really good look at that. And so beyond what's written in the DD or in the data room or in the model, we can actually get our guys to look at it and say, is this a good opportunity or not? And I think that's really helpful, because then we can say to other family offices, this is a business that we really like, we're putting our money in, would you like to come in alongside? And similarly, I'd like to be doing the same with other family offices, saying to me, our underlying business is whatever it may be. This is a great opportunity. We'd like to, spread the risk, only take a portion of the equity check. Are you interested in coming in alongside? Let's share costs. And then we have
due diligence as well.
Yeah. Share due diligence, share legal fees, share accounting fees, whatever, and then go into it together. Obviously, you have to make sure that you align with that other family office in terms of your culture and expectations as to when you're looking for an exit, if at all. But that's part of the process. And I think service providers, even banks, investment banks, are realizing that as well. Part of their service is now actually introducing you to other family offices, because they know there's going to be a lot of deal flow going that way, even if it's not from the bank or via the bank. But that's good service provision. Yeah.
It's an interesting point, actually. We saw a lot of family offices move out of private banks post 2008, where they wanted to manage their own risk, and they also wanted to invest in stuff that wasn't just on the bank's balance sheet and the bank's products.
Yeah.
And that has generally been an upward trend since 2008, 9, 10, and through the teens. Where do you see the private bank sitting in relation to the family offices now? Because we have private bank, we've got a single family office, we have multi-family office, and a number of different connections between those different bits. Do you still work quite closely with your private bank relationships?
Yeah, we do, and I don't think they'll necessarily go away, and we're not trying to replace the banks. They provide an excellent service and they're very good at what they do. And if anything, I think they're really improving their focus now on family offices. So that's becoming a big focus area of the likes of, UBS, of course, but Goldman's, JP, all of the big names. And they're starting to work out what family offices are, what they like, how to approach them, that it's not just transactional. Let's think about...
It's sophisticated.
Yeah.
The past decade is so much more sophisticated.
Exactly. And thinking about what additional services they can provide that actually makes it useful for a family office to have access to a bank. So we'll definitely still have relationships with them and looking to work strongly with them, and also try and identify what is meaningful to them as well, right? They need to make money. What's interesting for them? What type of business do we want to give them? They need to understand us, and we need to understand them. Not give them the real fee-generating, interesting business, but let them know what we like and what we don't like, type thing. I think with multi-family offices, again, so much comes down to alignment, right? So if the office is putting its own money on the line or other people's money on the line, what are they thinking in terms of fees? But there can be sometimes you get to a stage where, it's not a real multifamily office; it's a brokerage, or
it's very difficult to walk that line between becoming a multifamily office and actually having all the interests of the collective families at your core, and then actually that changes quite dramatically into just being a fee-generating business. And it's not focused on looking after the clients, it's focused on making money from the clients. It's a very different thing.
Yeah, exactly. And then you start thinking, well, why wouldn't I go to a private equity fund or something else, who's probably got more expertise or bigger systems. So it's trying to get that balance right. But, so much, I think with single family offices comes down to trust and alignment. So
that kind of collegiate atmosphere and sharing between single family offices is still more valuable than I'm sure you've been approached or had the conversation about creating a multi-family office in London, in Dallas. Does that come up?
Not necessarily creating a multi-family office, but certainly sharing information and deals, and there's no need for us to actually structure something around that. Rather keep it informal and speak and share deals and to the, as you said, depending on what your expertise is or where your geographic location is and stuff like that. But we haven't, the family's intention is always only to run a single family office, not create a multi-family office. And I think we can sort of get the benefits of working closely with other family offices without having to create a multi-family office. So that's been great, both here and in Dallas. Yeah.
And in terms of investment interest and appetite, has 2020 changed outlooks of the deal flow you're looking at? What's 2021 going to bring? We're all adapting to a very new marketplace and new world right now, and we don't really know what's going to happen next. How's that been reflected with you guys?
Yeah, I think so. In earlier years, we were far more focused on venture, taking more risk, early stage.
That's direct from you, not
direct
via a fund.
Yeah, but a few funds in there, but predominantly direct. I think we knew we were coming to the end of a cycle. Earlier, 2019, prior to pandemic, the valuations were getting extremely high, and that there was likely to be some form of correction. So we did start easing off on that, and and certainly with pandemic now, we've taken a little bit of a pause in terms of venture or the higher risk type investments, and starting to think, as I mentioned earlier, about more protection. And also thinking about, with all the money printing going on in the world, how do you protect yourself like that, or from that? But still looking at really good businesses, right, with good leadership, whether it be acquisitions for the operating business or even an acquisition for the operating business or taking a stake in a business. So I would say, to sort of sum up, there has been a slight shift from sort of broad terms, but from sort of growth investing to more value investing now, more of a Warren Buffett type approach.
Back to basics.
Exactly. So while technology companies are absolutely flying and have done so even more so over this year, the valuations are extremely high, and and there's parts of the rest of the world that are being ignored, and that's where we've got the flexibility again as a single family office strength, to be contrarian, to be flexible, to be nimble, to think about what's being overlooked by the rest of the market or other people, or what's not sexy at the moment.
The true strengths of the family office, going and buying those bits.
Yeah.
And one of the questions that often comes up when we're talking about family offices is kind of personal histories. How did you arrive at where you are in this office? What's your career path to here?
Yeah, so I'm originally South African, as you can tell from the accent. Was a lawyer in South Africa doing corporate M&A work for a big firm down there. I was always keen on being a lawyer and staying an M&A lawyer, so I thought, and so I joined a Magic Circle firm over here, which for me was sort of the pinnacle of the legal world in a way. New York firms and London firms, and so worked there doing corporate M&A again for a number of years, and actually ended up doing a deal for this particular family, which was more of a reorganization rather than an acquisition. Or a sale, and it was a very, very strange deal where you're used to working for the large banks or private equity funds or whatever, and here you're actually working for a family and real people and real money who were genuinely thankful for everything that you did, and giving you real direction and praise, which was very different. And yet the scale of it was a global M&A deal. The teams of lawyers on both sides were massive, and so through that I got to know the structure well, I got to know the people well, the family well, effectively put the structure together for the reorganization. And it was just, thankfully, luckily, it was just at that time that they were starting to have thoughts about setting up a family office that's more focused on investments. And so we stayed in touch and discussed that for another year or two, and then eventually I did decide to take what was at the time a very left field opportunity, but seemed like a once in a lifetime opportunity, because it was effectively a startup, but a very well capitalized startup, thankfully.
It's a very good combination of two specifically good things.
Yeah, exactly. So and also led by a third generation incredible entrepreneurial young guy who had an eye on tech, but also an eye on the operating business and family values. So it seemed like a really powerful combination for me to build something.
That once again, the human relationship, the human connection, is the genesis of something really good.
Yeah.
And I think that's all too often overlooked, especially in the hedge fund world,
Yeah.
maybe to a certain extent in the family office world, but actually in the fund space and the slightly more retail investment space, it's massively overlooked. When you can combine that human relationship with a well-capitalized, exciting business, that's a very, very powerful thing. So it's one of the reasons family offices can be such an exciting place to be.
Yeah.
It sounds like a good story that's run in the past and should hopefully run into the future as well.
Yeah.